It's the weekly 30-30 trading list on the ASX. We're looking at the 30 strongest momentum companies over the quarter and this week's best 30 launchpad stocks. As the last video of the year, we're adding in something special. Gary's reviewed his trades for the year and come up with his 4 biggest trading lessons. So with that, we're happy to jump into this. Good morning, Gary. How are you?
I'm good, Chris.
Sounds like a week of reflection.
No, I sort of, when we were sort of talking about this being the last show there, I sort of, after going through the list there last night, I thought, well, okay, what have I learnt for the year? And so I just started to write it down and just sort of think about just some things. They're probably the biggest lessons that I've learnt. So but let's cut through the list and then we can go through the lessons at the end there. So that's number one is the WGO for our quarterly momentum. Obviously, that's for a small stock. That's had a pretty good run there. Hard to trade.
Been there a few weeks, hasn't it?
Yeah, hard to trade that one there. Obviously, just sort of how small and apart from a little pause in the middle there, I guess you had a bit of a pause in here where there was no volume as well, and then you've sort of come out of the gates there, then bang, So, but yeah, pretty hard to trade some of those smaller ones there. ARU number 2 there, Arafura. That's not too bad there. I think we sort of saw this one did sort of break out here. This sort of congestion here, little ABC in there. I think the only thing in there you might have got thrown by this volume there, but that was a bit of a low there. So that's sort of come back in there. You could kind of say it sat on top here, but not at that one day where it flashed below. But yeah, so that was pretty solid up day there. So you might have been hinting at a little breakout there, but again, not the best sort of signal there. CHN was Chalice Mining there. This one's sort of been quite good here. Actually, obviously, this is sort of, you got your sort of high low in here, sort of breaking your uptrend there, came back to the 50 there, pretty light through there, bit of a pop, came back, sat on top of the high there, which is what you want to see, this light pullback. All that would have been a really good signal there, because then you're just sat on top of that previous high and an update there, and that's
big volume.
Yeah, and it's a good volume through here, and even the last few days, apart from that one day here, so far it's been tightish there, but yeah, looking a little choppy here now, but yeah, been a pretty good move. So that's probably one of the better ones in there. I think Regis is sort of one of the ones that I traded actually, so it's probably been one of my better trades here in the last sort of couple of months. So a little congestion there and a little pop through there. Again, pretty light back, all this little congestion there and then pop through. It's all sort of sat on top here. So I've sort of taken my money and run here on this one already, just because I've sort of had a few other golds on as well. So I just didn't want to be too heavy into too many things there. A2 Milk's been probably the one that's probably most surprising in this list here. It's been showing some relative strength throughout this whole period there. But nice sort of correction there, pretty light volume in there, and then you've got the sort of pop out of the range there, big volume there. That's been pretty robust there. It's actually been seen a lot of brokers upgrading numbers here. So got there equivalent to the States there. So yeah, it's definitely had a bit of traction there. Whereas I think we had Synlait last week. SM1 had a big move on big volume there, but bit choppy this one here. Obviously decent fall there. One that hasn't sort of moved too much is Bubs here. So after that big windfall there, Biden there, it's come all the way back here now, starting to sort of maybe base out here, but still a bit of a flat line there. Nothing too much going on there. Other stocks on the list there, number 19 was sort of Evolution. This one I sort of didn't mind here. If I remember, we had like a little descending wedge in the low here, then a bit of a break. Volume was okay there, and sort of started to see some volume through here, which was pretty handy. Pull back on even lighter volume, and then now it's starting to overlap here now, so it's sort of starting to. So you probably need to sort of see gold have a bit of try and base here now, try and go sideways, try and hold this move here. This has been a pretty decent move. Probably see some sort of congestion there. I saw someone actually post a chart there on gold, how many days the gold sort of gone up there, and it was equal to the last 2 rallies for gold in time. So yeah.
An alarm bell?
Well, yeah, I don't know. It's sort of like that doesn't always work out there, but it was sort of saying the last 2 rallies, gold's rallied this amount of time, and he actually called it pretty well. I was sort of like, I was hoping it was wrong because I was long a few golds there. So, but he ended up being sort of quite right there. But it did give me cause to just to sort of not go in too hard and to ease off. And then I've trimmed a few sort of into some heat there, and I've added a few sort of smaller ones. So I sort of traded different goals around that. But RMS was sort of one that sort of had done pretty well as well. Again, sort of a bit of a breakout here, good volume there. This thing's sort of come back a little deeper than you're thinking here, but you really when this started to sort of consolidate here, that sort of looked constructive there, but you don't want to sort of see it break below the previous sort of little swing high there. So when you're looking at this high or this high here, it should really consolidate on top of that, and then it can go again. So it probably, you can argue you can just, we can maybe touch it like in little touches there, but now we've gone below it. That's a bit of a negative sign here today, sort of breaking below that and sort of being quite clean there. So even though the volume's still pretty light in here, that's the positive aspect, is that the selling's pretty light in here, but just maybe we need to go through a bit of a pause. Maybe it'll go through a bit of a correction zone, but definitely be watching gold here this sort of next few weeks there. Just I say the only thing I've noticed at gold, Chris, is sort of like everyone sort of thinks it's a bit of a hedge, but I often find gold will trade with the market, not against the market. So if the market's going up, it'll go up, which it sort of has done, and if the market goes down, it'll go down as well. So it's not the hedge that everyone thinks it is, in my opinion. Zim was another one that sort of it's had a decent move here. So a little bit of a VCP in here, Chris, I just sort of noticed. So not one that we sort of saw there, but then it's sort of kicked up. It's a bit of a volatile share. Is hard to trade this one here. I have sort of traded this one before in the past, and liquidity is a bit of an issue, so you can never sort of trade it with any too much sort of size there, because it's just sort of difficult to get set there. Last one there was Australian Unity there, which was AOF. Again, this is sort of pretty small here, pretty light volumes all the way up here. Probably, we're seeing volume here now, but we're seeing it pretty late. So that's always a bit of a worry for me if I see volume late. So that's sort of the quarterly there. When I was looking at the daily ones there, I think
the weekly launch pads.
Sorry, looking at the weekly there, sorry. The SBM sort of one that had the biggest jump here, but that's sort of, I think that was sort of a bit of a corporate sort of activity there. And it's after a bit of a rally, but I think that sort of, that big bar sort of reversal there's probably just sort of taking a sting out of this sort of rally here. So probably might just sort of congest here. Concern there is that whole rally has just gone back up to the last swing low and installed there. So that can be a negative too.
So you're talking about the low back in June, July. That's
so if we're looking at a weekly chart there, that'll be the last low, bounce and then come down, and then we've just rallied up, hit the last swing low and found resistance there, which is sort of where you expect to find resistance. So that is a bit of a concern there, that we're sort of stalled there, and you've sort of got a couple of distribution type characteristics as well there. So just have to be cautious with that one. I thought SQ Square was sort of interesting. It's sort of I thought sort of what blocks sort of. It's a hard one to trade. It's a bit gappy, a bit messy there, but I noticed when it sort of gapped up last time, it sort of started to build in here. There was a little VCP in here, Chris, and then it popped up, had a bit of a retest in there, and then got going here. So it's had a bit of a move up out of this, bit messy, but then it's sort of come back in a little three-wave decline here. So I like to sort of see these, AVCs or AVC back in its decline here. So this here now to me is the key level to watch for block here. So 89.78. So I like to sort of see it congest back into this range here. See it come back. It's harder than trade, pretty gappy, but yeah, that could be interesting here. I just want to sort of see this consolidate above that level. It'd be nice to sort of see it come back in, sort of fill some of this gap here, maybe come back into, maybe sort of some into back to the 50 there, maybe around sort of 94. But yeah, again, a bit of a hard one to trade, but it's just one that I sort of keep an eye on time to time there. I saw Megaport's had a bit of a bounce there, but then, just again, it's just the wrong sort of sector here. It's just sort of, yeah, some signs that have sort of gotten back in the range is all right there, but again, it's just pretty messy here. Just you sort of, sometimes you just get to, you know, as my wife would say, you know, you got to pick the right battles. You know, you can't fight every battle. You just got to pick the right. You know, so the sort of growth here is definitely the wrong sort of place to be here. So just got to be careful to be sort of fighting in the wrong. You know, if you're going to be in there fighting, you know, just got to choose the right fights to sort of be in. Yeah, I just think that's sort of, sometimes you're in the wrong sector there. So
being in the right sector, the right thematic.
Yeah, to understand the sort of market. That's the thing at the moment here is, you know, sort of, you know, you hear guys, you know, spruiking small caps and spruiking tech and, you know, all the rest of it. You have to understand what market you're in. You know, what's, you know, that's the beauty of sort of, you know, I was trying to actually sort of explaining to my kids, you know, if you do all the homework and the research and look back, and by studying the 40s and 70s, similar sort of markets, similar sort of periods, what performed well in that sort of space, you're doing all the homework, you're laying all the groundwork to understand what sector is going to perform. So when you sort of energy, precious metals, and value shares, those are the sort of three areas you're looking at. We know growth stocks, they perform the worst in that area, so they're the ones you've got to be careful of. So it sort of gives you a heads up as to sort of where you should be looking. So I mean, gold's been a little bit of a funny one because it sort of didn't really have its bounce until late here. Energy was sort of out of the blocks, and then value has been the place to be. That's been a pretty good sort of segment to be in. So yeah, just got to know what you know, recognize what market you're in, and sort of trade accordingly, I guess, is one of the key things there. That SIQ actually was I like to look at that actually, Chris. That was actually that's the one that actually sort of did catch my eye here. The reason it caught my eye is because look at that volume there. Almost 4 days here. So we've sort of got that exhaustion volume there. So big exhaustion into the low, like a little false break down here. So I love the false break. And then we've had a bit of a bounce, pretty nice bounce. It's an okay volume in there. Had a bit of a pullback in here, so a little bit deeper volume there. It's like, you know, you would have had you a little nervous there, but you're maybe hoping that might be another sign of accumulation taking place, like these 2 big days down here, another sort of big volume day down near the low. And then what have we had? We've had 3 or 4 big days up here. So this is pretty interesting, SIQ, sort of one of the stocks actually, you know, this is one that sort of jumped out at me. So you probably want to sort of see, you know, we'd love to see this congest back into here, just now.
Like the $5 region, maybe.
Yeah, just maybe have a 2 or 3 days in just a little, you know, little consolidation there. Because this is our low, first higher low, you know, it's like sort of building a base here, you know. So look, if it came down at say 490 for, you know, something, you know, back into this range, you know, just a, you know, and then you just saw like 2 or 3 days down here, I mean, so far no volume. You know, you just saw, you know, really, I was trying to sort of say something where you sort of have a light sort of pullback there, just, you know, just a little shimmy, 2 or 3 days, you know, something like that, just sort of, you know, a few days down here on the side here, low volume there. Could be interesting to watch here. So this is definitely, this is the one that I circled to keep an eye on. And that's around sort of regulatory changes around sort of cars as well. So we think about SIQ does a lot of the salary packaging around cars and that. So we've heard now that sort of now you can get your energy, you know, all your EVs, yeah, all that sort of stuff. So that's could be quite positive for them. So but the volume sort of the interesting thing there. Obviously the market's moving there. RMC was okay there. Volumes are a little light. Not a big mover in there. I think Arafura was in our sort of weekly. GA Education's had a bit of a pop there, which was a bit of a fun one. There's been a decent sort of buyback on here. Yeah, I know it's sort of moved here. It's actually had, you know, okay signs in there, bit of a higher low in there. Like, I'm a bit biased here on this one. I just think I wouldn't trade this there. I've just got a personal reason as to why I wouldn't trade it there. What to do with management there, but yeah, it's had a bit of a pop there. But I find this one's a bit messy to trade. Not really. The ALY, that's that was one I had to sort of know there. I think red bubble there was one that people were talking about. Will it, get going Christmas here? That's pretty dull here so far. So there's no volume in there, Chris. Nothing to get. I mean, it's not showing real strength. It's a wrong sector to be in as well, sort of that growth. So, yeah. So I just sort of stay away from stuff like that. I was long some Bega here. I did sort of trim some of mine. I was just getting hard one to sort of trade with any liquidity. It's had a good move here. Did have false break here, which I love my false breaks here, and retested the low there and sort of started to tighten up. I like this little VCP in here. Then we got a bit of a break, but so far not big volumes in here. So okay, but not. This is probably characteristics of this market. Is it was sort of we had a couple of good signals there, but it hasn't really got going, is it? It's been pretty dull. So that's sort of it's been really the last 3 or 4 weeks for me. I've sort of been probably giving back a little bit of money the last few weeks, just sort of giving it back slowly as possible is sort of the key there. Sort of win big and lose small, but yeah, definitely been a lot tougher the last few weeks there. So hence why I'm probably, as of yesterday, I was basically sort of 2/3 in cash, and one of those was a short position as well. So yes, I haven't got too much out there. IFM was the last one there, had a bit of a pop, but nothing too exciting there. But not heaps of sort of signals in there, not the sort of quality that we've seen there, and that's typically a sort of when we, it's funny, Chris, that the quality, when we're getting lots of good signals there, it's usually when the market's on. When the market's not, when the market's getting a little top heavy like the last few weeks, we're starting to sort of just show signs of weakness, starting to roll off. We're not getting as many good signals in there. So that's a good sign. So just telling us here the market's a little timid here, a little weak. The only thing it's like you're sort of seeing some of the smaller stuff here at the end as well. So which is probably your riskier stuff. So as sort of Minervini was saying, is sort of, you can tell by the last, he uses it like the last trade. If the trades aren't working and they're not breaking out and following through, then that's how he'll bet a little smaller next time. Whereas if they're on and they're working and they're popping out, and then he knows he can sort of put the foot down. So yeah, I guess that's the beauty of sort of of the signals there. We're not getting sort of great signals through there. So that's sort of telling us to go invest lightly here.
Well, that's definitely, we've seen a bit of drop off in the last couple of weeks in the signals. But as this is the last reporting for the year, you had the benefit of looking back over your year and coming up with your 4 best trading lessons. So could you kick us off with number 1?
Yeah, so my first one is sort of mastery. And what I mean by that is my first lesson is don't try and learn everything. So narrow your focus and master a smaller set of trading principles. And that's about having a sort of smaller playbook. And so all the best traders, the one thing I sort of learned from listening to a lot of trading podcasts and a lot of traders and books and everything else is that the best traders have narrowed their focus. Whereas I've sort of always been a curious mind and studied all the different theories. I've really just refined that back this year, and the last 18 months I've just really tried to narrow my focus, just focus on a smaller set of trading principles and trade a small, my trading playbook, I've cut it in half, and really within that half I've actually probably traded half of that again predominantly as well. So just being a master of a smaller set of principles is sort of, that's the biggest thing I've learned. That has helped my trading substantially in the last 18 months.
That's a phenomenal lesson to learn, because everyone goes out there and buys 100 books, reads 100 courses, and struggles to put it together. But you're saying the best traders have zeroed in and just know their niche. Yeah,
just sort of rather than try and trade, oftentimes you go looking for whatever's hot, and you trade, but just focus on looking for certain particular things. Sort of, just either learn a certain pattern or trade a certain segment, or learn or just learn some principles there that are sort of going to keep you focused in a sort of a narrow area. So that's, and just become a master of that sort of of that area. So it's basically like it's like staying in your lane. So pick a lane and stay in that lane. and don't trade outside of your lane. Just, and if anything, narrow that lane until you become the master of that lane. That's probably the lesson number one for me. Has helped me quite a lot. The second lesson I've got is position concentration. And this has been a big difference for me. What I mean by concentration is the power of scaling up. So I've learned how to add to winning positions, but in the same time, still managing my risk as well. So I've never taken on more risk. I've never exceeded my maximum risk. So of being able to really, the biggest thing, the big difference for me this year is being able to scale up, add to my winning positions, still manage my risk. And so when I do scale up into a big winner, it really moves the needle. So just think about this, Chris. If you can scale up to, say, a 20% position of your portfolio, and that gets you a 30% return, then that adds a 6% return to your portfolio. So one position, just say just say it was over a month, one position scaled up, 30% return, 6%. So imagine if you sort of scaled into two positions, and over a month they both moved 30%. That's 12% return just from those two positions, maybe over a month.
Most fund managers would love to have consecutive years of 12%.
Yeah. So that's just think about that. That really does sort of, when you can sort of scale into a big position, and that's the big lesson for me. That's how Minervini and Caruso and Ryan and all these other guys that win the US investing championships. That's how they do it. They learn how to scale up into positions. And even if you listen to sort of like some of the day traders there, what's his name?
Lance Brightstein.
Yeah, those guys, S&B Capital. Then there's Nick. I think it's not Nick Rosito. I think the guy from Australia here, which I sort of follow online there. He's sort of, he's a pretty good trader as well. And they talk about sort of, learning how to scale up as well. So, adding to winning positions. So that's the big thing too. That's really moved the needle for me, and that's been the big wake up call for me in the last 18 months, is being able to do that. And just when you do that successfully, just seeing how much it moves the needle is like, that's when the penny drops and you go, oh, that's how these guys are actually making these bloody big dollars and big returns. That's how it's done. And then that excites you if you're able to do that a few times and get it, you see the needle move a lot. And then, because then when you're sort of getting a few small losses and stock down, small losses, and it can be frustrating, but then all of a sudden you don't lose much and then to power, then it's then you get the big move and away you go. So the other thing was number 3 that I think is actually market identification. So talked about understanding what type of market you're in, but also kind of when to feast. So basically feasting when the market is hot and fasting when the market is not. So just, which is really about, having sit out power. And again, this is something I've up until 18 months ago, I never really had the capacity to sort of sit out. I felt compelled to be in the market at all times, be trading something. I couldn't just sort of sit in cash and bide by time. But that's been one of the biggest lessons for me to improve my performance is really sort of putting the foot down when the market's on, taking the foot off when it's not, and just being able to sit, like I'm in 3/4 cash here at the moment. I might even be more cash here today. I might be close to 80-85% by the end of the day. So it's just having have the capacity to do that, and just that's move the needle. And the last thing is obviously what every trader sort of every trading book is around risk management. It's just so important just to keep clarifying yourself. It's so important to lose small. You have to live to fight another day, and hopefully win big on the next trade. Just think about it that way. It's just so important to lose small, live to fight another day, and hopefully, leave yourself open for a big win on the next trade. And those are the biggest lessons, I think that I've learned. I think number 4 is kind of obvious. It's what you read in all the books, but actually learning that and, putting all the other principles together does sort of hit at home. So that's the thing for me. You just got to review your trades. I know we were chatting earlier, Chris, about my trades and the best week and worst week, and then you got to, that's probably the other thing that's is important to do is to review your trades. It's sort of probably a bit of a forgotten skill for a lot of traders. So you got to go. That was one of the big things for me actually was to got me to change my trading was to when I 2 years ago when I reviewed my trades, it revealed a lot everything I was doing wrong. I was almost embarrassed to look at my trading and how much I was trading, how wild I was trading. It was just so much. It was just all over the shop. But yeah, I sort of refined that as a result of reviewing. But even now, it's important to review. And even just having this conversation today, I thought about this. I did sort of review my trades there. I look at my results every week, so I can sort of see what was happening. And for me, I sort of looked at my best weeks and then my worst weeks, and there's 4 or 5 times difference between my best weeks and my worst weeks, which is sort of what you want to see. So I think my best week was like 13%, which is pretty cool. And then my worst week's around about 3%, 3.2% down, which is not great. But then obviously it's a lot smaller than my best week. And then just having I worked out sort of a 3-week spell. I had 3 really good 3-week spells there. So that's always probably the lesson for me learnt there was that if I had 3 really good weeks where my P&Ls moved substantially, that's probably the point where I should be starting to lighten off as well. But yeah, that's the lessons that we learnt. So just hope I've helped. Just everyone who's out there learning to trade, just keep persevering, just keep learning, keep following all the principles that you read and hear and all the professionals talk about. They do make sense if you sort of keep trading and following it there. They will sort of fall into play, but I think just managing a risk that's so important there, and the rest you can sort of work on and build on.
They're really solid lessons to take the year out, and I appreciate you sharing them with us because it takes a lot to reflect on your trades and then also put it together to compile it in a way that you can deliver. So thank you for putting those together, and also again, this is the last one, so thank you for all of the Friday reports and dissecting the charts that you have done in front of us, and always on the recordings. So for those who have watched and listened, if you want to say thank you, or you want to tell us whether Gary's helped or things that have helped, you can comment below. You can like the video, which helps the channel. But I'll say here now, thank you very much, Gary Glover, for a year worth of great podcasts, great insights, and great trading lessons.
No, thanks, Chris. I've enjoyed every session. It's great. I view it as I'm learning as well. So I'm learning every week, and it's keeping me disciplined doing this, and then letting me opportunities, and like the relative strength there is so important too. Looking at the stocks that it's funny that those sort of we were chatting earlier about sort of my trading there, but in July, off the July low, that was the biggest needle move for me for my P&L this year, and I was just trading the stocks that looked the strongest. Whereas in October there, I had a pretty good move in October, good move in the P&L, but I took a more of a broad-based sort of market view rather than looking at the strongest stocks. And I had a nice move off the October, don't get me wrong, but the biggest move I got was actually trading the stocks that looked the strongest off of that July low. So that's the biggest lesson that's not that lesson I sort of when I reviewed my trades, I thought, okay, just got to trade what the market's going to tell us which stocks are the strongest, which ones are holding up the best. You got to trade those ones, and they're the ones that come out strong. That's exactly what happened in July, and that really moved the needle for me. I had 5 weeks in a row there where it moved up. My P&L had that was a big mover for me. It was sounds funny, but that 5 weeks was almost equivalent. Well, it's actually better than some of my previous years in total if you get the right period and move. And so it's it's definitely sort of useful. That's why I think that's such an important principle, and that's why we're here every Friday doing the relative strength there, because it's such an important principle.
Yeah, absolutely. It's as you're highlighting every single week, here are the strongest charts on the ASX, and then here are the ones that are setting up that can move into it. and then applying these lessons that you've talked about or the principles that you're talking about. Well, if that comes down to being the best performance over 5 weeks compared to years. But probably at that point, we might end the year and say for Gary's keeping across his trades and what he does, then there's these Friday videos where we're looking at the strongest momentum companies, the launchpad ones, setting up, and then monitoring his portfolios and the trades that he's placing. That's his Tuesday videos. So those links are both on the right-hand side there. And following Gary on Twitter, that's on the left-hand side, you can see his handle there. Thank you very much, and we'll see you all again in 2023.
Thanks, Chris.